You ever have that feeling? You're driving to work, you glance at the petrol station, and you think, wait a minute, wasn't that price different yesterday? It feels totally random, right? One day it's up, the next it's down. What is going on? Okay, let's dive into this, because once you understand the system, I promise you will never look at that glowing price board the same way again. So, here it is, the big question. Why do these prices change every single morning? Is it some huge conspiracy? Is it just the luck of the draw? Or, and here's the kicker, is there a massive global game being played every single day that directly decides how much you pay to fill your tank? Well, the answer is way more fascinating than you think. All right, to crack this mystery wide open, we have to start at the beginning. And I've got a super simple analogy that's going to make everything just click. Forget global economics for a second. Let's talk about something much simpler. Picture this. On one hand, you've got something like tomatoes. If there's a bad harvest, the price goes up. If there's a huge crop, the price drops. It's simple supply and demand. But petrol? Oh, petrol is a completely different beast. It's not just a product, it's the actual lifeblood of the global economy. This is the stuff that can start wars, move armies. Honestly, in some ways, it's more powerful than gold. And here is our first major clue. That fuel nozzle in your hand, it's the very last link in a gigantic, real-time global chain. Every single time you fill up, you're plugging directly into international trade. Isn't that wild? So, we've established that your local pump is basically plugged into the whole world. Which, of course, brings up the next question. Who are the players in this crazy, high-stakes global game? Well, let's pull back the curtain and meet the biggest name on the board. Everybody, meet OPEC, the Organization of the Petroleum Exporting Countries. Just think of them as a club, a really powerful club of nations that are sitting on a sea of oil. They can literally get together in a room and decide, as a group, to turn the world's supply tap up or down. And whenever they twist that tap, the price of crude oil sends a shockwave across the entire planet. And here's the thing you gotta understand. The price of crude oil is not stable. It doesn't just change, it reacts. A war flares up in an oil-producing region, bam, the price spikes. OPEC decides to cut production, you guessed it, the price climbs. Even something like a hurricane shutting down refineries in the Gulf of Mexico can send a tremor that you feel right at your local station. Okay, so the price of global crude oil is a total roller coaster. We get that. But here's where things take a really interesting turn. Because the price of that raw crude oil, it's only one piece of the puzzle. Let's dig into what you're really paying for. And this is the question that drives everybody nuts, right? You see it on the news. Global oil prices have dropped. But then you go to the pump and the price is barely moved? Why? What is happening between the oil well and your car? Okay, let me break this down for you. This is where it gets crazy. You'd think most of your money goes to the actual crude oil itself. But just look at this. It can be less than half. You've got refining, transport, the dealer's cut. Those are just tiny little slices. The giant, overwhelming piece of the pie? Yeah, that's taxes. And that's the big reveal right there. In a lot of places around the world, you're paying more in taxes than you are for the actual fuel. So let's say the international price of crude oil gets cut in half. That massive tax chunk? It stays exactly the same. And that's why the final price doesn't drop nearly as much as you think it should. But hold on, the story doesn't end with economics. There's another layer here, and it's all about psychology. This brings us back to the question. Why change the price every single day? Well, as it turns out, there's a very clever and maybe a little manipulative reason for it. This quote absolutely nails the strategy. It's all about managing our reaction. A massive price jump overnight, that would cause outrage. People would be protesting in the streets. But small daily increases, we barely even notice them. We just sigh, accept it, and get on with our day. It's a brilliant, if frustrating, use of human psychology. And here's how that math works against us. A tiny increase of a few cents or paise feels like nothing. It's so easy to ignore. But you repeat that tiny increase every day for a month, and all of a sudden you're paying a significant amount more. It's the classic boiling the frog theory, applied directly to your wallet. The changes are so small they never set off the alarm bells. But wait, it gets even more complex. You're not going to believe this. But there's another invisible force at play that can change the price of your petrol, even if the price of oil and the tax rate don't change at all.
Here it is, a simple fact with massive consequences. The default currency for buying and selling oil on the world market isn't your local currency, it's the US dollar. Period. So, just picture this for a second. Let's say 1 barrel of oil costs $100. The price of the oil itself hasn't budged. But if your local currency gets weaker against the dollar, it suddenly takes more of your money just to buy those same $100. And where do you think that extra cost goes? Yup, it gets passed directly onto you at the pump.
Okay, so let's zoom out for a minute. Why does any of this matter? Why should we care so much about these tiny daily changes? Because the price of petrol doesn't just exist in a bubble. It sends massive ripples through the entire economy.
Think of it like a chain reaction. When fuel gets more expensive, it costs more to transport everything. I'm talking from your apples to your Amazon packages. And that cost gets passed on to you, the consumer. Suddenly, your groceries cost more, and the general cost of living, what we call inflation, goes up. It all starts with that price on the board. And here's why we feel it so much. Petrol price is what you could call visible inflation. Think about shrinkflation. You know, when your bag of chips gets a little bit smaller but the price stays the same, you might not even notice. But the price of petrol is displayed in giant, glowing numbers for everyone to see every single day. There is no escaping it.
So let's tie this all together. The price changes every day because it's a constant daily recalibration. It's reflecting the 24/7 chaos of global oil prices, the shifting value of currencies, and the volatility from world events, all layered on top of a huge fixed tax structure. At the end of the day, it's not some secret conspiracy cooked up in a back room. It's a massive, interconnected global system of economics, politics, and psychology. And whether we like it or not, every time we start our cars, we're plugging right into that system.
And I really want to leave you with this thought. Look, knowing all this doesn't magically change the price, but it does change your perspective. Understanding the why behind those numbers is a form of power. You're no longer just a victim of some random price change. You're an informed observer of a complex global economic dance.
So that brings me to a final question for you. Now that you know how the whole thing works, what do you think is better? This system of daily pricing that tracks the market in real time, or a fixed price system that gives us stability but might hide other costs? Let me know what you think in the comments below. Thanks for digging into this with me.